Awesome. Well, welcome everyone. I think we'll let people continue to trickle in, but I think we'll go ahead and get started with intros. My name is Alicia, and I am the host curator of the Invest in Africa webinar. The goal of this conversation really is to highlight the practitioners that are investing on the continent. I think that there's a lot of amazing investors that are doing the work of mobilizing capital for African entrepreneurs, but there's a big glut. And so in hosting these conversations, we can both learn, what are the strategies, what are the approaches, what are the challenges, with the goal of really just making some of this information more accessible and for folks that are interested in starting a fund, for diasporans that want to figure out how to invest, some of this information can really come to the surface. So excited to have you all here. I am very excited to be joined today by Olutosin Oni from EchoVC. He's a principal there. I will go ahead and pass you the mic, Olutosin, to just provide a quick intro about yourself and maybe how you got started with the fund.
Sure. Hello, guys. I'll pronounce it with as it's said in my language. It's Olutosin Oni.
Okay.
I said in Lagos. So my background, I grew up in Lagos. Lived here for quite some time, and then school and work in the UK. Probably you can tell from my accent. And then returned to Nigeria for work. I worked in investment banking, asset management for quite some time. Kind of jumped off of that to scratch an itch, an entrepreneurial itch I had. Tried my hands at that for 3 years, burned through all the capital that I had, and sat back and said, okay, what now? And then I met Agosa and joined EchoVC in 2017 September. And I've been an investor there since. EchoVC, a bit of background on EchoVC. So EchoVC got started in 2014, but really started from a vision and a thesis. Was developed in 2012, and that was tracking how venture capital was growing across the world. And the thesis was, look, Southeast Asia, Africa, which were then significantly underserved and not on anyone's radar, were going to be very interesting places for investing, for building companies. And Agosa set out to raise a fund to invest in those spaces, in those geos, kind of doubling down on some of the work that he had done as an angel and also as an investor at Untitled Chapter. Raised a fund, just focused on, finally was able to raise a fund, but just focused on Africa, also leveraging his relationships and background as a Nigerian, and started investing in 2014. So the first fund started investing in 2014 and was aimed at writing seed and really early stage, really early checks. And by early, I meant checks from, written as low as 25K to as high as, gone as high as 500K, 750K. In 2016, we entered a partnership with a big PE fund, particularly the London-based team of the fund, TPG Growth, and the Rise Fund. And they're looking for Africa exposure, but not Africa exposure, not just for the sake of it, partly because they were seeing African deals, but by the time they were seeing them, these companies were growing really quickly, and it didn't make sense for them from a PE standpoint. So they said, okay, you know what, we're not going to put boots on the ground. Who can we work with to help us do the work, source deals, diligence deals, negotiate, structure? So that's what we do. We do all of that, craft the thesis, and present to an IC of TPG Growth, the Rise Fund, and EchoVC representatives. And if that is approved, then they fund based on the terms that we've negotiated and presented, and we continue to manage. But the portfolio companies have access to TPG support, TPG growth support. And there the partnership was focused on writing what for them was is termed a small check platform, but for us it's sizable. So we're writing $3 million to $10 million checks. Under that platform, we invested in 4 companies, made 6 investments, and exited 1 in December 2019. Which is pretty cool. Yeah.
No, so thank you for that intro. And I think I'll say quickly for folks in the audience, if you have questions, feel free to drop them in the chat. I'll check them as we're kind of having the conversation, and some of them I may save to the end. So if I don't get to your question right away, I'm holding off on that till the end circle, or I'll circle back at the end. So basically, Olutosin, what you're saying is the fund started in 2014 as essentially doing small checks, $25,000, $50,000, and then kind of got into this partnership in 2016 with a kind of a growth stage fund, and kind of became this intermediary for investing on the continent. And then I think what we'll get to a little bit later in the conversation is, this fund 2 that you all are raising to continue to invest. So I guess I'll start off my question for you with, if you could just give us a little bit of a backdrop on what EchoVC's thesis is, and why that's the thesis. What was compelling about those particular categories?
So I think the thesis was developed really by just literally looking at the opportunity set in this market, in this context. There's certain things that are features of very many markets, right? They're fragmented, they are largely offline, they are just inefficient. So the way we look at, from a thesis standpoint, is what is in a particular sector, pick a sector, what is the opportunity here, and where is the opportunity to bring value? So broadly, the really important ones for us are or what we term organizing the offline, and there again is based on the understanding that markets are largely offline. There's so much that is done in little. Everyone is fighting their own battles, building their own infrastructure from the ground, and having to, build all the way back and build the entire stack of what they need. Our thesis is that the opportunities for companies to be built that build out some of that infrastructure and bring a lot of this activity online, right?
What would be an example of something in your portfolio that's kind of doing that?
So the investment we made an investment that we exited. It was in Frontier Cars Group. Now, Frontier Cars Group is a company focused on emerging markets, secondhand car trading in emerging markets. So Nigeria is an important market for them, but they also operate in Mexico, in Pakistan, in Chile, in Argentina, and there, if I can speak to what happens here, what you find is you have these auto dealers, the secondhand auto dealers, who essentially are just sitting somewhere with their phone and WhatsApp. They have relationships that bring them cars, and they have relationships through which they sell cars. And these guys are selling, 2, 3, 4, 5, and depending on the structure and as they grow, they build scale. And supply is a big issue for them. So FCG and the Nigerian business was Cars 45 set out to create that funnel that brings used cars to these dealers. So It's akin to Auto One, and it's not a new model. They're executing it at scale. And by bringing this, by building this funnel, you bring efficiency to the process. It makes it, so part of the process they go through is that they're looking at the cars, they're checking them, their history that they've stolen, and what condition they're in. So they start to standardize the quality and things like that. And ultimately, that also has a lot of value for the end buyers that the dealer sell to. So it was really, at least it started out as a consumer to business, Cars 45, which was about building that funnel for all the people who may want to sell a car, as opposed to putting, for sale in the back of your car. You could just take it to a Cars 45 and they put it through the system, and a dealer bids on it, and essentially you may not like the price. You can then decide on whether you're going to take the price or not, but at least you can get a bid on your car. But on top of that, now you can start this. It was announced Liaison, like I said, the standardization, the data on the quality of cars, and the issues with cars, car parts, and financing the dealers and financing the end consumers. You can build a whole stack on top of that.
Right.
But it's, like I said, it's behavior that has existed for years and years, and it still exists. I mean, it's massive. It's just in Nigeria, it's in the billions of dollars that gets traded every year.
Yeah.
Building a funnel really helps to bring efficiency and simplify this, and be able to create.
No, so it's like taking any offline business, adding some kind of technology stack to it, and then of course that adds in a kind of a scalability component, and then a kind of efficiency component to it. So the fund is investing in online to offline. What are some of the other core theses of EchoVC?
So another is friction. Now, friction is a feature, you see it a lot, and it exists in many markets, not just here. You want to, and it's under that I think for us, a lot of the payments guys in fintech will come under, right? To think that when I moved back to Nigeria, ATMs were relatively new and they were incredibly buggy. You couldn't rely on, I mean, there's still issues with it. It's not perfect, but that I had an ATM and I had money in the bank did not mean that I could, definitively get my money out. But with these guys coming into the market, that process has simplified, has been smoothened. And now I don't have to carry cash. During the lockdowns in Nigeria, I can actually count the number of times I touched cash. And 10 years ago, 15 years ago, I could not have tried that because I will go hungry. You may have an ATM, but you also go with a bundle of cash just in case this doesn't work. Fragility. So it's just all the impediments to economic activity. What are the things that need to happen that could be made easier? So identity is a big one. I want to lend to you. You want to open a bank account. How do I know you are who you say you are? So go bring this, go bring this, go bring that. But even then, many of these things are maybe faked or not quite right, or is it Evan or is it Evans? That kind of stuff creates friction in the process for transacting, for economic activity. And we're very interested in businesses that are working to remove and build, again, it's about infrastructure that removes that friction. And sometimes it's not even about removing the friction, it's just about reducing it, just making a less suckier product, a less suckier service. And it positioned right, and something that people need and use, you get a lot of adoption for it, and you're able to scale.
It sounds like in a lot of ways it's because the other two I think are I think it's like we have more of an impact oriented vertical of your thesis, and then the other one being fragility. But I think the theme that ends up being across the three of them is that it's really, it's kind of an infrastructure or a foundation play where maybe the business model is kind of like lower margin, but really just more about scale. Does that resonate?
Well, it doesn't have to be. It is about infrastructure, but it doesn't have to be low margin. We invested in a legal tech company that is doing pretty well, and really about helping law firms just better organize their systems, how they operate. They started out just trying to help firms manage, cases and interactions with the court system here, which are still very manual, and then moved into building out a full OS for running a law firm. And they're now at the stage where, and it's also a business model you're seeing in the UK and the US. It's also very interesting, very hard. And they're getting very good traction for the biggest firms and also for the smallest firms. And it's not low margin, I can tell you that, but it is infrastructure.
Gotcha. And so maybe could you give us a sense of what terms you all are investing at with some of the deals that you're looking at?
What do you mean terms?
Or just kind of how much are you typically, what's an average check size? How much are you typically taking as far as ownership?
So out of our first fund, there we were, and the smaller checks were really pre-seed deals. The real seed deals that formed the bulk of our portfolio, the check sizes were in the 200, 250 range, going as high as 500. And they're, pretty standard. You're looking, you want the whole round to be investors buying 20, 25% of a round. And depending on what component of the round we take, we scale appropriately. It's not, it's I would say pretty standard in terms of terms. What you do get is that that we always tell entrepreneurs to be mindful of is that, look, there are metrics and multiples used in many markets. Market sizes are different, speed of scaling, how quickly you can physically scale here in a cost-effective manner, the availability of follow-on funding, so that is changing. That's changed quite significantly in the 3 years I've been investing, and that's been very good. But there's still a lot more. So what we always say to our advice, generally, and our view is, read across from what's been done elsewhere, but also factor in and truly understand the dynamics of the market and the context you operate in. And sometimes, I mean, not very often, but sometimes what it means is that your business is actually rated more valuable from a metric standpoint than elsewhere, but sometimes it isn't. Sometimes it is just a part. The important thing is that there's that awareness that you may be incorporated and domiciled in Delaware, but you're operating in Uganda, you're operating in Tanzania, and the dynamics of that market are very different from Silicon Valley, say.
Can we double click on that quickly? Because I think it's so interesting. I was reading the Britter Bridges report on 2020 investments. They estimate that it's $1.3 billion that has been invested on the continent, but 400 million of that were invested in companies that are actually domiciled or have headquarters in the US. And, I'm curious what your company or what your fund's kind of thoughts are on the where companies are domiciled, and even what the long-term impact that has on the ecosystem is when I think the top 4 places where companies were domiciled is the US, the UK, South Africa, and Kenya. And so Nigeria wasn't even on the list. I'm just curious kind of what the impact that has on you all as investors, and then kind of just general impact on the ecosystem.
Right. So there are a number of factors to consider. I think one is where's the money coming from? right? Where's the investment capital coming from? The current state of things is that a lot of the capital that is invested on the continent, even by local VCs, is non-domestic capital, right? And like we always say, everyone's pitching. Entrepreneurs are pitching us, we're pitching LPs. If I'm talking to and raising from an LP sitting in Connecticut or sitting in the UK, I have to give him something that he understands. And we're seeing that change. But there's just so much more that can be done in that respect of getting domestic and real domestic capital involved. I think you are seeing that, but it will take some time. So that's one. The second is you really have to think about the current state of development of legal systems. So if I'm investing, I'll give an example. So if I'm looking to invest in a company here and I'm bringing, while trying to localize, standard structures. So I'm looking to buy preference shares, it's a or and a convertible note. How does Nigerian law view those securities? How does Kenyan law view those securities? You will find that very often they may be called preference, but the way they're either very often untested in the law. So you don't, the law says these are the rights that accrue to these securities, but it hasn't been tested because it's not used very often, or it's actually not very clear because these things develop by use, and when it gets there, then there'll be a big swell and push to change that. But if I'm and we have actually invested in companies who are Nigeria domiciled, and I know it's a palaver when in a subsequent round an investor comes and says, well, okay, I want this and this and this, and we're like,
Right.
Are you sure you can get that in the law? Are you sure that that's quite how that security works? And so if a lot of the capital is coming from outside, the law is untested, and my job as a VC is, apart from providing capital and support to help you grow, is also helping you figure out where you get the next round of funding. If that next round of funding is likely to come from elsewhere, you know what? I think it would be best to make it easy for him to let domiciliation not be the issue. Oh, I love everything about you, but I don't understand the legals around how you're set up. So maybe next time. It's really that simple. Now, impact on the ecosystem, I think you start to see situations where companies announce, big rounds, or at some point you start seeing exits, and local ecosystems are like, wait, hang on a sec, we're not seeing any of that happen here, and that's because it's been done offshore. You're seeing countries enact laws and regulation that try to kind of, so there's some markets here, and it's again,
right? I think Kenya has a startup law where I think local ownership has to be at least 30%, something like that.
Right, but you always have to balance that with what benefits accrue to that. So if I'm going to pay that price, quote unquote, because there is it's friction, perhaps is how I should put it, to the fundraising process and things like that. What, as an investor, do I get as a benefit from that? So I think things will evolve. Things are evolving, I forget which North African country has one, Senegal has one, and these things will continue to be fine-tuned, right? And as that develops, I think with the growth of domestic capital, things will change. And for example, when you start seeing local pension funds, and you're seeing that, for example, in South Africa, when you're seeing local pension funds get into venture capital, that would be interesting. Yeah. That would be and like I said, you're seeing that in South Africa, where some of the bigger pension funds are making, albeit small in the broader scheme of what they could allocate to VC. So VCs are now like, well, this is how the laws are set up, and we can't remit capital, we can't do this, we can't do this. How do we work through this? And with that kind of money and pension funds involved, you start getting governments and local pressure groups actually pushing for changes in many of these legal systems.
So circling back to one thing that you're mentioning around LP engagement, I think kind of what you're just speaking to now is that there's generally, we're in the middle of a big change, right? Like there's a lot of accelerated interest in investing in the continent. And so governments are starting to catch up to I would say some governments are catching up to the fact, other governments are kind of resisting. I think we'll get into that a little bit with like crypto in Nigeria, but I'm curious. So the fund has been around for 6 years. And I think my understanding is that most of the LPs are from abroad. I'm curious, or from abroad, meaning outside of the continent. Could you just talk to us a little bit about how EchoVC was able to get that initial capital? And then for Fund 2, are you all seeing that those initial investors are wanting to stay on? Are you able to attract new investors given kind of the development of different African ecosystems? Can you just kind of give us a perspective into the LP status?
So we were fortunate. In Fund 1, we got a local institutional to commit and allocate capital to the fund. And I mean, if I could toot our horn, they're quite pleased with the allocation. In fact, I think they wish that they allocated more. But yes, most of the capital was from outside the continent. Now, for that was not just. I mean, we did look for local capital, and we only got one institution to bite. For Fund 2, we're going through a similar process. Some of the local institution is hopefully going to re-up, but we're seeing greater interest. But when you're targeting a fund 75 million, the local interest is not there yet to be able to fill that. So again, going back to the guys we spoke to in the initial fundraise, and getting a bit more interest there. I think it will be this, outside of Africa, within Africa, and over time, the within Africa chunk starts to grow. And it will be over time. And it's not just going to be us. So you have other funds who have done much better getting allocations from high net worth individuals, from small asset management companies, from family offices, and all of that is necessary. All of that is good, and I think we'll continue to see that. But I think in the immediate term, I think a lot of the capital is still going to be coming from outside the continent.
From abroad. And I guess it sounds like your optimism is that maybe the current climate isn't ideal, but as things start to progress, there will be this change over time where you'll have more domestic being on the continent investors because I think the issue for me sometimes ends up being, how do you not have the equivalent of a Google that was founded on the continent that is predominantly foreign owned or is acquired by a Google, right? Like, how do you actually get a Google that's founded on the continent and has local investment, right? Like to kind of then keep the wealth within the continent. And so it's kind of interesting to hear.
I think people underestimate how young venture is on the continent, right? And let's look at it in the scheme of things, right? In Silicon Valley, how old is venture? 40, 50, 60 years?
Yeah.
How old is it here? And outside of that, because you have to understand that and accept that venture is, at the risky end of the curve. So look at the broader investing market on the continent. The biggest markets by far are investments in federal government, in government securities, right? I think I remember when I moved back. So one of the first things I did when I came back as an investment banker was seeing the rebirth of corporate bonds in Nigeria. So that's 15 years old here. I mean, it's always existed for a very long time, but
Right.
you know, companies having regular issuances and things like that, that's 15 years old here. So and this is from the bluest chip of names. Have only just started regularly issuing corporate bonds. Now you're racing all the way to the other side of risk, and that's even much younger. And it's not going to happen. It's not going to happen instantaneously. It will take time, but it will happen, and we're seeing it.
Yeah.
Things like and part of that is culture, right? People have traditionally invested 30 days, 90 days, and oh, let me see my money back, right? Okay, to get to the point where, okay, I can lock it up for 10 years, at least it's a government, right? But as people see investments play out, you know, some of the exits that we're seeing, like the Stripe deal, Stripe Paystack deal, you know, has people sitting up and saying, am I missing something here? What should I be looking at? And, you know, people are like, even if I can't commit my institution in this way, you know, call reach out and say, Tosin, you know, what's happening? What are you guys doing? You know, if you see any deal, you know, just pass it along. Maybe I can write an angel check. That is how it grows, right? And it will happen. It will happen.
Okay. No, it's great to hear the optimism around that. I think I want to.
Not everyone will be as optimistic as me, but it is my job to be optimistic as an investor.
Makes sense. So switching gears quickly, just to a little bit about your investments. So could you talk a little bit about the way that you all have developed your deal flow, and then I think in connection with that, or maybe I'll just pause there, just kind of a little bit about your deal flow. It, you know, in looking at the portfolio, your strategy doesn't seem to be, we're going to pluck anything that's kind of been vetted through YC. We're actually have an entirely different network that we're sourcing from. So if you can give us some insight into how you all are finding your companies.
So I look, as much as capital is scarce, good deal flow is also important, right? Because very often it's for us, we're always very like, you know, the saying no or not yet. I mean, for us, it's a little different because we're fully invested out of our first fund and raising a second fund. And I could, you know, another time maybe over drinks, share war stories. But even where you know, you're like, you send an email and say, okay, no, we're gonna decline this. It's for us, we're always there's someone who's and this is more to our process. For it to get to the stage where we're, you know, actively engaging and looking at it, someone in the team has essentially raised the flag and said, oh, this looks interesting, and you know, I think this is something we should look at. And even when it's declined, very often in our internal chatter, someone will be like, yeah, I told you guys you should have got in on that deal. So it's generally a no, not now, as opposed to no forever by the time we're engaging. But in terms of deal flow, we're fortunate that by being one of the older institutional investors, people come looking for us. It's also part of the reason why we engage in like having participated in conversations like this. We had to put ourselves out there so people know about us, what we do, how we look at deals, how we think, and things like that. So a lot of it is cold, and I'm happy to say that we have made, you know, not one, not two investments in companies that have come cold, i.e., no one knew anyone, and just sent an email on the website, and everything that comes in on the website gets at least 2-3 sets of eyes to look at it. And
that's actually pretty impressive. I know some funds where it's like, yeah,
it's hard work, but look,
it's a warm intro.
It's changing now as ecosystems are building. Finding someone who knows an investor is, if I can say, is easier now than when I joined in 3 years ago. It's much easier. You'll find a conference, you'll find a conversation, you'll find a Zoom meeting, and you get an email address, you get, oh, okay, this is what they've done, and you Google them and you say they've invested in this, invested in that. Let me reach out somehow. A lot of it also is reaching out to accelerators. So yeah, we do engage with YC companies, we engage with 500 startups, we engage with Techstars companies, we engage with some of the local accelerators in Kenya, in Nigeria, in North Africa. There's a big one in Egypt. I mean, that's absolutely, cooking with fire. We engage with every, with all those systems, and get to see a lot of companies, because we're sector agnostic. We're not experts, but we always say, you have to put in the effort to have an opinion about something. So the more you engage in a sector, in a new sector, something you don't understand or know about, and research, the better informed you are, and the more defensible an opinion is.
Right.
Just, I don't know this, so I don't. And the market is so young, and the need is so broad. In the, you come across companies doing things, and you're like, wait, hang on a sec. You mean you can actually build a business doing this? And then you're engaging, like, okay, this is an interesting way to back into this big opportunity. And then you pry a bit more, and you're like, wait, hang on a sec. There's a whole world you can build in this, and you don't get that if you don't take at least a first look.
Yeah.
So that's, for us, that's very important.
Could you, because I'm just being mindful of time, I do want to get into a little bit about the kind of how you all navigate the regulatory environment in Nigeria, more broadly across the continent, but maybe just to kind of get us into that conversation, how do you all, when you're evaluating companies, how are you all de-risking or looking at ways to de-risk your investments? And then I think from there we can jump into, a little bit more on the regulation. And if that's interconnected, then feel free.
So one of the things that we found very early on, and it plays out time and time again, is the amount of support that companies need at the early stage. Again, as the ecosystem builds, that will change, and it is changing. Now you're having law firms who have teams just serving startups.
Right.
I mean, you have quote unquote Magic 5 law firms with a whole team serving startups and serving technology. Most of those teams are less than 5 years old, right? So that support is we found it to be critical. So we actually
you all work with a law firm. Is that I guess how that's structured for you all, or?
No, so I say that to say that, so for us, we actually have a team that is just focused on how do we help you succeed, right? How do we help you succeed? Yeah, it could be, stuff at the coalface, how do you help you get intros to prospective customers?
Right.
But it goes to nuts and bolts of how do you structure this deal with this particular customer? Very often, I mean, it comes down to almost butting heads, but constructively to say, well, if you structure it this way, but the company, then the team that the portfolio company says, well, but this is what we've discussed, and almost like a strategy session saying, this is how we should structure this deal. And sometimes it's, okay, let's structure this one like this. because it's new. And subsequently, it's going to have to go in this direction because remember, this is how you're trying to position the company for subsequent investment and things like that. To how you set up for taxes, how you set up, you're currently incorporated in Kenya, but is that the best place, or Nigeria or in Tanzania, is that the best place for you to be incorporated? How should you be set up? Where should you be holding IP? Is there IP in the business? Has IP been appropriately allocated? Stuff like that. It gets tedious, but it is so necessary because it's the work in the trenches trying to support them. So very often, for example, if the last thing I'll say is that periodically we'll write and say, okay, you had your last strategy session X months ago. I think it's time for another one. And few plans survive contact with the road, but what that process helps is you're directly engaging the team, and they're forced to look up. Everyone's very often can be very tactical in making it. I gotta get the next deal the next day and whatever. But okay, what's the vision? What route is this about? And look up and say, what's the route that you're trying to plot? Yeah, twists and turns along the way, but that's stuff that has to be done to support the companies.
This is all happening after you've made the investment, right? This is not what you're kind of looking at as far as due diligence to assess, like, is this a super risky market or is this a super risky, I don't know, just industry in general? This is kind of on the back end of, we've already invested. We're kind of building a little bit of a venture studio model around our work with you.
Right. It's post-investment. It's, how are you thinking about this? I know, view the stories of VCs that read random articles and send it to a founder, like, how are we responding to this competitor? No, but it goes beyond that to say, how we set up to attack this opportunity. Yeah, how are we thinking about this? But beyond the strategic, it's also the very mundane, like I said, how you want to grant options. How should you be thinking about that? Why is options structured this way? I had a conversation yesterday with a founder who was like, well, I want to offer this. And the founder, the person I'm offering says, oh, I want these and this terms on my option. I'm like, well, options are not structured like that. This is why. It literally comes down to, but all of that support is necessary to maximize the chances that a company succeeds. The other is looking around corners. So we're fortunate that many of us have experiences outside of broadly, and for us, it's important in terms of how we select for the team. So you're having people with different views about sectors, and like, oh well, I saw this happen in another sector, and this is what happened. And some of the things that you're starting to see now. So for most companies say, well, no, this is not going to be an issue. And we say, well, you know what? When you get big enough, and it includes regulators, when you get big enough, they will come for you, right? When you get big enough, they will come for you. So you don't tell me, oh, we can fly under the radar. You will not fly under the radar in perpetuity. So how do you structure yourself? How do you get yourself set? How do you start to engage? How do you, the SEC in Nigeria only had crowdfunding rules. Crowdfunding rules, I think, are months old, right? How do you engage and help them craft and draft those rules? All of that stuff. That's I say that's my work, helping you think through and round corners. Like, this is going to be important. Regulation's going to come. This is how it's probably going to come. It's probably going to come from here and here and here. Let's head that off.
Do you have a network within the government? Because I think about this sometimes. It's like, as a fund, how do you kind of get ahead, right? Like, how do you anticipate some of the regulations that are coming down the pipeline? Do you all have government like liaisons that you work with? Is it just really network based? Is it just kind of like keeping up to date with what's happening? I'm just curious how you all think about, because it sounds like what you all are doing is essentially saying, like, how do we just stay ahead of the curve, right? How do we stay ahead of change?
No, I mean, so regulatory liaison is not, we're a small team, though we're but big for VC. So it's a lot of work. It's networks. It's, you know, keeping up to date with news stories. It's regularly checking the SEC's website for new rules. It's checking the CBNs. It's, you know, building relationships with people in the regulators. It's all of that. And as sectors open up or become interesting from entrepreneurs, as you start to see more entrepreneurs, say, attack a particular sector, in addition to engaging the entrepreneurs and getting to understand the market, you're also thinking, okay, what relationships or who in my network can help me get a view on how the government, how this, you know, union thinks about this, or how, you know, all of that stuff. And some of that stuff compounds. You know, you engage with a company, you get to a certain understanding. It's important to be out there, just trying to feel the pulse. And sometimes you get it wrong, or sometimes you're late. I mean, you're doing a scramble to very quickly get up to speed on it. But that's the work, particularly in a market where policy can be so fluid.
So in looking at your portfolio, I didn't see any crypto investments, but I'm curious if you can just offer some thoughts on kind of what's happening with the regulations around that industry.
It's I think the easiest way to put it is that where this ends, we still don't know, right? What we are sure of is that, look, there are certain aspects of this business, of what this involves, that sit or, you know, kind of go against sensitivities of certain important regulators in Nigeria, for example, or in Africa in general. So you look at, for example, and often it's, the unfortunate part of it is it can be very personal. So you look at what happened in Zimbabwe, where EchoCash started to trade, EchoCash was mobile money for Zimbabwe. So Zimbabwe has had issues with its currency and devaluations and things like that, and inflation. But you ended up in a situation where EchoCash and currency or value held in EchoCash became valued above physical cash. And then you started getting arbitrage between them. And essentially, as a central bank, you're like, wait, hang on a sec. I'm meant to control, you know, money. And the relationship with the founder of the company didn't help. And essentially, the government shut it down, right? To what's happening in Nigeria with crypto. I think there's some combination of understanding what it offers, in-depth understanding, but I think it would be naive to say, well, they don't understand it, so they want to kill it. Because what is sure is that, and if you've, you know, followed the CBN in Nigeria, the CBN's track, there are a few things that are sacrosanct, which is remittance, currency, things like that. They want to have a view on it. They want to be able to control it. They want to see how it's flowing. They want to be able to control it. So you're introducing something that, you know, kind of circumvents a lot of these controls, and they're going to be like, huh. So for example, even before crypto, something that happened, where are we? I'll say 3-4 years ago, was a lot of the remittance plays, when the currency went off kilter and devaluation was just before a reassessment of the value, I won't say devaluation. The CBN was like, well, okay, enough of this remittance play. So at that time, guys like TransferWise couldn't remit to Nigeria. They sent it around, we're not doing this, this is why. Asimo, all those guys stopped. Subsequently, regulations were brought in and things like that, and they started operating again. So that is how they have performed.
Because I get the sense that, and looking at like what happened, I think it was in February with the like motorcycle ride, like the Okadas.
Mhm.
And then also, I think it was in August with Uber and Bolt. It sounded like the ways in which the government got involved and was like, no, we want to start regulating this, was actually more to say, oh, this is incredibly profitable. We don't quite have a way of capturing some of this value. So we want to like put a halt on it and then engage you in a negotiation where we can actually get some percentage of revenue or, you know,
Mhm.
have some kind of licensing payment, whatever it is. And
Mhm.
then it's like, okay, now you can continue. So part of me wonders if it's not more about the government trying to figure out how to diversify, increasing their budget outside of oil. And it seems like it's
Right.
kind of in a one-off way, but I'm curious if that, you know, what your thought is on that.
No, I think that's fair. I think that's fair. So, and it's not easy. It's not straightforward.
Sure.
It's not a situation of saying to Uber, well, you knew this was coming. You've been you're having regulatory skirmishes all over the world. Did you think Africa would be different? You should have engaged. Now, if you had engaged, the answer probably could have been no. In which case, if you did, get going, then like, well, hang on a sec, we said no. So why are you operating? Um, for some of these things, I think fundamentally you have to break some eggs first
Yeah.
and then very quickly engage. But from the get, you have to understand that this is it is this is possibly how this will play.
Right.
Right?
And not to paint this picture that the government's only trying to do that to kind of make some money out of the circumstances. I think part of it for like Lagos was that wasn't part of their strategic plan. I think they wanted to invest more in like the busing infrastructure, and
Right.
having all of the motorcycles got really kind of like challenging with that. So not to kind of skew the perspective on it, but it's interesting to see that like when you get to the closing of some of these conversations, it's like, oh, now there's a licensing deal, or like now they're paying X% of revenue to.
Yeah, right. But sometimes also it's like with the Okadas, it's the other way around, where I found out recently that these companies engaged, they got licensed, but the licenses they got were not quite what they thought it was, right? Um, and sometimes, there's the view that policymaking is haphazard, and very often it does come across it, and sometimes it is, right? But it's not so straightforward. It's not, like you said, I agree with you. It's not just about, oh, how do we squeeze a dime out of these guys? It's also just about, look, we don't understand this. How do we make policy? And how can we get you around the table to discuss this? How do we, yeah, you started, you think you've placated a few people, but you know what? In the grand scheme of things, this is not what the plan is for Lagos. And at some point, we have to rein it all in. Navigating that is not easy, right? It requires a nimbleness, it requires risk. And if you are not willing to take those kind of risks, then this is not the game for you.
Yeah. Well,
And,
yeah.
navigating it, does not and should not assume that you can 100% get it right.
Right.
I think it's what is the important message is to have the awareness of, look, these are the places I need to pay attention to, whether it's taxes, how you're set up, your licensing regime, things like that. Those are the things that you should have an awareness of, that even if I don't have the answers now, my decision to roll out operations means that I'm taking this risk.
Right.
I may subsequently be able to set that right, but I may not, and to be clear about that.
Yeah. No, well, thank you for kind of providing some insight on that. I think for me, it's one of the more interesting conversations, given the fact that day by day things are changing on a regular basis. So yeah, it's really interesting to hear that. I think we've hit the hour mark. And I think you said you had a couple of extra minutes. So I'll, before people start dropping off, if there are any questions, I'll kick off with Tunde's question here. But if folks have questions that they want to offer or they want to pose, feel free to throw that in the chat. Tunde's question was, does EchoVC invest in companies in the diaspora, and how do they source these companies? And if no, why not?
Okay, so it started first with the partnership with TPG Growth. What was important for TPG Growth was that we're getting Africa exposure, but these businesses should have a view or there should be a clear path in terms of market size, in terms of strategy, in terms of how you go after the market, of expanding outside of their home market into other parts of Africa and even outside of Africa. It's part of the reason why we invested in FCG, which was operating in X number of countries at the time we invested, or many of the companies we invested in. Migo. Migo's a Nigerian company, but they've expanded into Brazil. So that gave us an appreciation of the broader opportunity. Subsequently, we have made investments in what we've termed Africa Blend, right? Africa Blend.
Blend, okay.
So, which is in companies operating outside of Africa, but for whom Africa is important, or Africa could be important. So for us, for example, you're doing something very interesting in a I use this loosely, parallel market. And we're like, well, hang on a sec, I like that behavior is something that I think would be very interesting on the continent. So we've made in some investments in that, in those kind of companies. So that broadens us to start thinking about business models and approaches and things like that outside of Africa that are applicable here. Then we also started looking at, well, there are many Africans doing fantastic things, building companies that don't involve Africa outside of Africa. And those also, so this track kind of led us to broaden our view, which was, there's a broad opportunity to serve underserved markets and underserved entrepreneurs more broadly. We'd like there to be an Africa component to the team, to the business model, to the approach, but we've kept it general in that way. And I won't say we've necessarily got it right or nailed down the structure under which we make those kind of investments, but it's something that we're definitely doing. We invested in a cloud kitchen out of the UK that's doing phenomenally well. Started by
which one, can I ask?
I don't know if we've disclosed it yet. So
okay, no worries. Only because at BU we were investing in a cloud kitchen as well, so I'm curious.
Right.
Good.
And I mean, started by an African founder based in the UK, but the model is interesting of itself in the UK, but then got us thinking, how could this apply on the continent, particularly because of the way she did it. And we're starting to see a lot more interest in South Africa and Kenya with cloud kitchens, and
that's interesting.
Underutilized cooking space and cooking infrastructure. And I think that is something that food is something that is very interesting for us. Food as culture is something that's very interesting for us.
What I like about that is, cloud kitchens are still very new in the US, in the UK, in Europe. And so, when I think about that, I wouldn't have immediately thought like applications on the continent, but then the reality is, it's like, why not, right? Like, why not just jump to that? It's, so yeah,
right.
That's interesting. I wouldn't have thought.
Yeah, and part of it also is because you have large diaspora of Africans, right? And so that becomes, you have my favorite restaurant in Lagos. What if I jump on a plane and head to New York, and I can get that same food exactly by that same brand. Only cloud kitchens makes that possible. Because for some of these guys, setting up your own restaurant in New York and London, you're navigating all sorts of regulatory capital requirements, but you could transport a lot of that just by using cloud kitchens. So it's, for us, it's not just, and we spend a lot of time thinking about this and researching this. It's not one way, it's both ways. How do you transport flavors? And again, diaspora Africans moving back or coming to visit, what's the easiest way for you to get some of the things that you're more used to elsewhere? It's, like I say, it's food as culture that you carry around and you want to stay plugged into no matter where you are.
And I think the interesting thing about, that train of thought is if more of the infrastructure or taste are also in the continent for diasporans, then, like you start talking about food tourism, you start talking about travel or kind of experiences that are based on, something that's like, I'm still having something that's maybe, something that I can get in the UK, but maybe is like also because I'm here on in Kenya, for example, can also get. So anyways, it's kind of an interesting parallel on kind of the tourism component.
So the work we've done there, and like I said, the stuff that started with TPG, just opened eyes to the broader opportunity about what are Africans, or what is being done out there that by Africans or that could be interesting for Africans. We're still working on how we structure that, how we nail down our thesis and process around investing there, but we're always talking, always engaging.
Yeah. So maybe just to wind down then, if there weren't any additional questions, what would you leave? I think perhaps the audience is a good mix of people that are interested in investing. I think there's a couple of entrepreneurs also as well, but maybe speaking to the investors, aspiring investors, members of the diaspora that want to, figure out a way to get involved. I guess I'm curious, what words of advice, or maybe what perspective could you leave us with on ways of getting involved, but then also something that maybe folks aren't really thinking about with investing that maybe they should be considering? I realize it's a big question. It was trying to keep it small.
I think from an investing standpoint, there are increasingly avenues and structures for greater participation by African diaspora to invest and get exposure in Africa, right? Then a couple of people trying to, either, with what you're seeing in with the AngelList rolling funds and things like that, there's a lot that is being done. And it literally is these structures being set up to take as low as, I don't know if they just really, and that process, when you're exposed in that way, you sit up and you pay attention, right? And what, aside from bringing in capital onto the continent, what it does then is that it makes you more, just more attentive. So you're engaging with, the data sources, whether it be Disrupt Africa or Tech Cabal or Baobab Insights, or, all these different news sources that have, again, grown up all in the last few years.
Right.
To see what's going on, what's happening in these sectors. And one of the things that COVID has done is that many of these outlets have set up, these engagement opportunities for people to engage with investors, with companies, with just to get plugged into the ecosystem. And once you start getting that, then it ricochets from there. You can then figure out, okay, how do I want to play? Do I want to invest or write more, put more money in here? Do I actually, maybe I could help. I could, reach out and say, I've got these set of skills from wherever, and I'll commit X hours a week to supporting, and one should also underestimate the openness of, particularly, for example, accelerators and things like that, to some of these skills, because very often we're sitting thinking, okay, our portfolio companies at the stage where it's like, it needs to be so much data he's accumulating. He needs to be thinking about how he's set up to manage the data science of what he's collecting, right?
Yeah.
It may not be at that scale where you can, it comes out with fantastic, very interesting products, but he needs to be set up to collect data in a certain way so that he's not starting from scratch when he gets there. And for that stuff, someone with that skill from Google who commits 10 hours, in a month is very helpful. So by engaging, and one gets to better understand how this all plays and how your skill set, whether it's time, skills, or cash, can further support that and get you engaged.
And then what would you say is one thing that's understated about investing on the continent?
It's understated.
Ooh, it gave you pause. It was good.
I wanted to be positive. I wanted to be positive, but I think it's not said often enough that, look, this is a long game.
Yeah.
It's a long game. And the stories of UiPath that goes from 0 to 35 billion in X years, or Hopin that goes from 0 to X billion valuation in the course of a pandemic, is generally the exception rather than rule.
Right.
And even more so here. It's a long slog, but it's a very interesting one, because I think in many ways our society here has been set in its ways for too long, and one of the things that entrepreneurs and startups do is shake things up, get people to think that of another way that things can exist, of another way that things can be organized. And I think that getting us to not just accept the status quo is of itself beneficial and very necessary for the development of our society. It's very big picture and very fluffy and hand wavy, but it is beyond the building businesses and creating jobs and improving lives. It is building society.
Yeah.
And I think that is necessary.
It's such a beautiful, I think, way to close, because I think that, to your point, or what you had mentioned in the beginning, right? Like when you think about how old the Silicon Valley ecosystem is, all of the different stakeholders and the level of engagement there is, and how far and how nascent a lot of the tech ecosystems are on the continent, it really does, kind of beg the question of, like, yeah, this is early days. How do you get involved now? How do you offer support if you have skills and resources? Where do you plug in? What data sources are you reading? And then kind of developing a strategy that's saying, like, hey, like this is a 20-year conversation. This is a 30-year conversation. And then when you start thinking in those terms, I think it's like Jeff Bezos that has his like 100-year strategy or something, right? Like when you start thinking like that, it really shifts where you see opportunities and how you might engage. So I think that's really exciting.
I think so too. I think so too.
Awesome. Well, thank you so much for taking the time to speak with us today. Thank you to all of the attendees. I hope that you all found this valuable. This was recorded. I'll be posting it so that people who missed it can view it, or if you want to circle back on it, that's possible too. I think with that, we'll close out. Thank you again. Have a great day.
Thank you. You too.
Bye, everyone.
Bye-bye.